Hello and welcome to Beat the Street. I'm Jeremy Naylor, the show that gives you all the tradable news and data you need to know ahead of the Wall Street Open in 1 hour's time. Looking for a positive start, but let's take a look at the headlines because we're leading on what's happening on the foreign exchange markets as we see the Dixie down. The dollar basket on the way down as a result of what we heard out late last night from the Federal Reserve, waiting on further data to confirm its next move. This is a message we're getting constantly across all the Western economies, all the central banks. But what we're seeing today out on a limb is coming through on two earnings headlines, looking as though we could well see a little bit of negativity injected into the markets at the top. And we've got Peloton on the way down, all sessions on the IG platform as a result of a drop in revenue. Paid subscribers on the way down. They're not subscribing so much now to Peloton's subscription service for fitness regimes. And Moderna shares sliding $1.3 billion. Shares down, right down on unused COVID shots. We've got a big move on Moderna shares at the start for the trading day today, penciled in for 1 hour's time. We'll take a look as well at that on the All Sessions platform on IG. Now, let's get an update on what's happening in terms of some of the economic data coming through, because we are getting some figures coming through in terms of the US numbers on weekly jobless claims. It's the weekly Thursday release. Initial jobless claims coming through at 210,000. We got 208,000 this time last week. 210,000 on the 4-week average. The initial jobless claims themselves, I beg your pardon, 217 is the number, 217,000. We've been looking for 210. The previous reading was 212, so it's a little bit higher than this time last week. Now, it doesn't often move the markets, but what I want to do is to take a look, first of all, at what's going on with volatility, because I think this is something which is of interest, and this is driving volatility down because money is going into risk assets, and we've seen this again today. We're now down at 1726. Now, this is the biggest move in over 4 days since March 2022. But the trading day today is really dominated around the foreign exchange markets. Now, we are seeing selling of the US dollar. And this is the trade we've been following, the Andrews pitchfork. Since the lows that we had back on the 18th of July, we've seen this pitchfork handle here. When you get this projection, you see traders buying as it hits the pitchfork all the time. You continue to see buying, and that's carried on until this break. And when the break happened, we then put the pitchfork on. We got the low point here, which was the highs we saw on Thursday the 12th of October, the release of the last lot of CPI data. Since then, it's been trading sideways, but because we got this upward thrust here, we are now at the bottom side of this channel. Now, I will be buying this on the basis that we've got, if the Andrews pitchfork does continue to sustain this pattern, I'd be buying at 105.61. That being said, I would be very reluctant to do so unless we get well outside this on the way down. At the moment, at least, all bets are off because we have a short dollar position building on the markets at the moment. I can't see many buyers on the Dixie at the moment, so it could well be that the Andrews pitchfork might all be written off in the next day or so if we get a close below this rising line of support that we've got coming through here at the bottom side of that Andrews pitchfork. Now, if you are an FX trader, you'll be wanting to take a look at what's happening with the euro dollar. Euro dollar has, in today's session, has peaked above this line of resistance I've got in place here, which are the highs we had back on the 11th of October. Time now, I think, suspect to move this up to get a better idea as to where the top is now at 106.95. We're buying at 106.51. If you get a candle close beyond there, the next line up to watch out for is this area up here, which coincides roughly with the 200-day moving average. Now, the 200-day moving average is interesting as well because we've got what looks very close to be a crossover between the 100 and the 200 moving average. Now, there's a convergence here that's going on. It hasn't actually happened yet, but it certainly seems that momentum is on the upside, which means that the euro is taking advantage of that weaker US dollar with people buying and going long on the euro dollar trade. So that's how things are looking in terms of what's going on the foreign exchange markets. Just a quick update on where we are in terms of the Dow Industrials. Just want to take a look at what's been happening in 10-minute candles, just to show you what's been going on. And indeed, in the last half hour or so, we've got more gains going into this session today. And we've just seen that breaking news coming through from the US with the details coming through of weekly jobless claims. This is continuing to support the market for the Dow Industrials. We've got gains not just for the Dow, but also for other indices as we see the start of today's trade. Let me just quickly take a look at the broader market index. And today we've gone beyond the 200-day moving average at 42.73. We're now on the way up for a fourth day in a row. So it's a strong week as we went out of the gate on Monday with this gap up, and we've succeeded in sending the markets continually higher right the way throughout this week. In fact, it's been the best week on all these markets for several months. The US Tech 100, again, another one on the way up today. So it's not just buying old economy, it's buying some of those tech stocks as well. So it's worth looking at this in the context of some of what we've seen in terms of some of the earnings news that's coming through. Just to quickly remind you, later on at 2 o'clock this afternoon, got factory orders expected to rise 2.4% in September, month on month. But I think much of what we've seen today has really been all about the Federal Reserve holding interest rates steady at 22-year highs for a second straight meeting last night. This means the Fed funds rate remains at a range of between 5.25% and 5.5% as the central bank waits to see how its aggressive credit tightening campaign filters through the US economy. However, it left the door open to a further increase in borrowing costs. The policy statement acknowledged the US economy's surprising strength, but also taking in the tighter financial conditions faced by businesses and households alike. Jerome Powell told reporters inflation has been coming down, but it's still running well above our 2% target, according to the statement. A few months of good data are only the beginning of what it will take to build confidence. Now, I can tell you, after having just seen the numbers coming through from the Bank of England, if you overlaid the comments there on what we're hearing from the Bank of England, it's a very similar picture. We've got interest rates here in the UK at 5.25%, 15-year high. They've been raising interest rates. They didn't raise last month. It was a very close call. It was more of a confident vote today, but in fact, the message is exactly the same. We're just awaiting data. If we do get reason to raise interest rates again, the Bank of England is going to pull the trigger. And that's exactly what we heard last night from the Fed. But at the moment, at least, certainly on the equity markets, and so far as the dollar is concerned, the implications are, from what we heard last night from the Fed, is that we've got markets that are receiving this in a somewhat more dovish frame of mind than they were when they went into the numbers late last night. Now, talking about last night, we saw a couple of stocks reporting earnings and trading all sessions on the IG platform. I want to begin, first of all, with PayPal. It raised its full-year profit forecast well above Wall Street estimates, sending shares higher in extended trade. The group expects adjusted profit for the full year to be around $4.98 a share. Analysts on average had expected $4.92. Now, this announcement came with the publication of PayPal's third quarter earnings. Earnings per share coming in at $1.30, beating expectations of $1.23. Revenue jumping 9% to $7.4 billion. Now, this is one of those stocks that traded all sessions last night on the IG platform. Now, in the context of where we've come from, when you look at this chart and you look at what 2.8% looks like, which is what we got today, added onto the 3 or 4%, 9% we saw up last night, look at what we've got. It's just a small move in what is otherwise a really hefty down market. The thing is about PayPal, of course, is the chances are if you pay anything on the internet, the chances are you get steered towards PayPal if you have an account. And it is benefiting from that in some part. 55.22 is where we're opening on the markets in now is almost 50 minutes time. So we're looking for a stronger start for PayPal. Also for Airbnb, traded lower after the release of its third quarter earnings last night. Excluding a one-time income tax benefit, Airbnb posted adjusted earnings per share of $2.43 compared with the average analyst estimate of $2.10. Airbnb's third quarter revenue rising 18% to $3.4 billion from last year, broadly in line with analyst estimates of $3.37 billion. But investors reacting to the group's forecasts for the current quarter, it says it sees fourth quarter revenue slightly below Wall Street estimates at $2.13 billion. We've been looking for 2.17, so it's not too far away. So that is the reaction that we've got. But what I want to do is to take a look at this in the context of today, because it's turnaround. Yesterday we saw a drop. Now this is bearing in mind, this is an all-session stock on the IG platform. That was yesterday's trade there. And in fact, let me just quickly turn this back down into an hourly chart just to show you where we saw the release last night. That was the release we saw last night. But since then, the company has come round. We saw a press conference last night, and all of a sudden you got buying in the stock. And let me tell you, this stock is now penciled in to rise at the start of today's session. So the fact we saw a drop last night has been offset by the bigger than expected rise all sessions on the IG platform this morning. So we're looking for it to open around about the 120.50 level, up from yesterday's cash close. So that is ultimately looking like it's going to be another positive mover on the markets this morning. Now, let's take a look at a couple of companies that came out this morning with numbers, and they are both broadly negative. Moderna. Remember, this is the company that did so well during lockdown because it was the one that came up with the mRNA vaccine. Its ticker is MRNA, and it's announced a $1.3 billion write-down on unused COVID shots. Now, the group also expects 2023 revenue of at least $6 billion, tempering its forecast to reflect weaker demand for COVID-19 vaccines. A clear disappointment for the market. I want to show you what's been going on in terms of the move that we've got for the company this morning, all sessions. You can see quite clearly, if you bring up the chart there, today's trade on the way down, looking for a lower start to the trading day. Let me just quickly see if I can go back to before we saw the company run away with the news on vaccines. That was the beginning of the really big rise of 2,700% for Moderna, as we saw it benefit from the uptake of drugs to try and combat COVID. Since then, we don't hear an awful lot about it, thankfully. And as a result of that, these companies that have big numbers coming through for COVID from up to last year, such as Pfizer earlier in the week, you'll remember they took a hit as well. Moderna has taken that $1.3 billion write-down, and as a result of that, we're looking for a drop of around about 10% at the start of today's session. Added to what we heard last night, the company did go on to say that it would return to sales growth in 2025 and break even the following year. But as we've seen, all sessions on the IG platform, it is down. So we're looking for a negative start to that for Moderna. Now, let's take a look as well at the third quarter for the company, reporting a loss of $9.53 per share, a lot more than the 1.9 loss. Most of these losses are due to that downsizing. That is a loss per share of $1.09. I beg your pardon. We had a lot of loss per share of $9.53. We were expecting a $1.90 loss. Revenues, $1.8 billion. Expectations have been for something a little bit less than that, but nonetheless, as we've seen, we've got a big drop on the stock in today's session on the IG platform. As a result of all that, Jefferies analyst Michael Yee said in a recent note on Moderna, he said that he expected the numbers of COVID shots administered in the US would hit 35 million to 40 million rather than the minimum of 50 million doses forecast by Moderna. So you can see whichever way you cut it, it's a negative story for the mRNA company. Now, let's take a look at another stock story this morning. So-called connected fitness company Peloton is down all sessions on the IG platform after some poor numbers. In its fiscal first quarter, the loss coming through, 44 cents. We've been looking for a loss of 34 cents, so that's 10 cents worse off. Revenue, 595.5 million. We've been looking for 591 million expected. But overall, the company has said in a statement the loss for the 3-month period that ended September the 30th was $159.3 million compared with a loss of $408 million this time last year. Sales dropping down to that level I was talking about, down from 616 million as paid subscriptions were seen falling. People no longer using the service as it did. Peloton stock is down, but it's off the lows. It's down 6.7%. We're certainly expecting it to open weaker at the beginning of today's session. Let's wind the clock forward now to take a look at a couple of stocks worth looking at after the close this evening. Apple is one of them. It's set to release its report for the fiscal fourth quarter after the market closes tonight. Current market expectations are for Apple's fourth quarter revenue to decline marginally by 1% year on year to $89.3 billion against $90.1 billion this time last year. On the other hand, earnings per share expected to be at $1.39. Now that's up 7.7% year on year and 10.3% up from the previous quarter. Investors will be looking closely as well at performance of products and services. Apple's hardware product sales may continue to struggle because of Apple's exposure to China, a market that accounts for 1/5 of the group's revenue. A report from Counterpoint Research suggests that iPhone 15 sales for the first 17 days of sales in China had underperformed last year's iPhone 14 sales by an estimated 4.5%. Now, the Street therefore expects Apple's services segment to offset a possible fall in product sales. Now, add all this together with all that we've got coming up, and we've actually got a gain in the stock at the moment. This is purely on forecasts, and we are looking for a stronger start to Apple shares at the beginning of today's trade. They're currently trading 176.36, up on the cash close last night, and we get those numbers out after the bell this evening. Apple stock will be trading at that point, so you can trade that. And as we were talking yesterday, just want to identify a pattern I think it's worth looking at. I love trading patterns, and patterns as we have them at the moment. If I can just quickly show you what's been going on here. I don't seem able to get my pencil up here. Here we are. So we've now got this drop here in resistance. Let me just shorten that a little bit because I want to take this correctly. So what we have here is a downward facing wedge pattern. Downward facing wedges look negative, but they're not. They normally resolve on the upside. So what you take is you take a mean of the distance between these two, and this is what's called a bullish wedge facing down. It resolves on the upside. It means that there is the potential technically for this stock to rise. So let's take the average height and then replicate that. If I can copy that, take that up there. Now that gives us a projection of not too far away from the recent highs at $195.60. We're currently trading 176.33. Now, even if we get the most bullish outlook tonight, I can't see it rising that much. But I think longer term, if Apple can prove that it is doing all the right things, and it did have that release a short while ago, it was talking about some of the markets in which it's now operating, the updated iOS, the updated watch, the updated various other parts of the business. So there is something I think possibly maybe Apple is looking forward to. We'll have to see tonight to see what it says after the earnings. But if they are as positive as the technical charts suggest they should be, then that is the end result at some point in the future. That would be a resolution or resolving of this downward facing wedge, the bullish wedge pattern that is developing in Apple's shares. So that's taking a look at some of the stocks on the move. I just want to dial into one other share I think it's worth looking at after the close tonight. Coinbase Global. Now revenue is expected to be at $653 million, up 10% on this time last year. It's forecast to report a loss per share of 54 cents, which is a significant improvement on last year's loss of $2.43 for Q3. Now, last quarter, Coinbase surpassed analyst expectations with both top and bottom lines. There were, however, some areas of concern. The group's reported one of them was a transaction revenue for the second quarter. It came in at $327 million. That was down from $375 million in the previous quarter, and that hit the stock hard. Total trading volume is also a figure that investors will be looking at. But this is another stock that trades all sessions on the IG platform. And if you'll remember, recently we saw expectations that the news coming through from BlackRock that its ETF on Bitcoin is likely to be approved, and that's certainly the market expectations. We saw a drop, we saw a rise intraday all the way up to the highs here at $89.38, which was the highest traded point in the shares since the 8th of August. And if we do get a bullish outlook and a bullish number this morning, later today, when we see the report coming through after the closing markets tonight, we should see this stock follow on with further gains. And that'll be reported on tomorrow morning by us in the early morning call at 7:30. We'll also pick up on what we're seeing for Apple tonight as well and work out where that could go at the same time. That's it. A quick tour around some of these stocks to watch. In around about 40 minutes time, we'll be taking a look at what looks like a stronger start to the equity markets on this Thursday session. I'll be back at 4 o'clock this afternoon. We'll look ahead to Friday, and then tomorrow morning, join me at 7:30 on the IG platform for the European early morning call.